Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, June 2nd, 2020. It's almost 11 o'clock Eastern Time as I'm starting the video, and I just want to do an update on the broad market and commodities, some of the things I've highlighted recently. And again, I have a pretty somewhat of a pretty tight focus right now on the US dollar and the euro. And I just wanted to kind of go over that. I say this a lot, and I try to put this in words here. I like to get these static charts out, in other words, chart images, and then every now and then do a video because it just helps to really convey all the little nuances that go along with this. And one of those being the fact that, I tried to make it clear in here that longer term, the outlook, I believe the outlook for the US dollar is bearish. I mean, I think we can make both a strong fundamental case. Most of the global central banks are trying to, support their respective economies right now, becoming very accommodative with COVID and everything else, but nobody, and the Fed has just gone completely and utterly nuclear, and that can only be, from a fundamental perspective, a longer-term bearish for the dollar. So I think the fundamental case supports it, and if I see this chart, to me it's fairly simple. There's a few lines on here, but we only have two indicators. And if this doesn't make a pretty compelling bearish case for the dollar, I don't know what does. We're going back over 2 decades. This is the 90s here on the left of the chart, 1999 all the way into the late 90s. And without fail, all the divergent highs have been marked here. 1, 2, 3, 4, 5, and now 6. And you can see that's the RSI up top, and then the PPO down on the bottom, all the divergences right there, and positive divergence as well, that last one noted there. And so, trading and investing are all, to me, it's all about probability, statistics, taking calculated bets, putting the odds in your favor, using attractive risk-reward ratios. Nothing is ever 100% in trading. No trade has a 100% chance of success, but you can, again, it's all about putting the odds in your favor. Now, so we go back over 2 decades, and we can see the past 5 divergent highs that we've had, and we can see what happened since then following those. And so again, to me, it's pretty compelling. This divergent high led to a major drop in the Dow. In fact, all wasn't said and done till right there, but we had a nice counter trend rally, put in another divergent high right there. So you can see the arrows are marked, and should this time be any different? Again, we can sit there and argue it. You can make a technical case, you can make a fundamental case, but to me, this one's clearly indicating, big major a trend reversal, not just a correction, but a trend reversal in the dollar, at least a trend reversal from this intermediate term bullish trend right here. And also not just the divergence, but look at these overbought readings. That's typical. You become overbought and then a little less overbought the next time. Sometimes that second overbought reading like this kisses that 70 level on the RSI. That 70 level denotes, overbought. And there you had it again, and that's what we have here. So you have the divergence plus the overbought conditions at this most recent high, and that to me is about as strong as a case you can make that for a likely significant correction. Again, on the scope of these previous corrections, possibly more if that trend line's taken out. There's an uptrend line there. So okay, that's bigger picture. Now shorter term, at the same time that I'm longer term bearish on the US dollar, which should be a net benefit for gold and silver and dollar sensitive assets, I'm near term bullish. Now I also want to make clear, as I tried to do in here, that divergences are not a buy signal. They are an indication that a trend reversal is likely, and again, you can go through this chart on your own. These charts, these are the divergent lows and the divergent highs are marked. You can see what happened afterwards. That was a divergent high here as well. I didn't have DH there, but you could see divergent high number 1, 2, 3, and this was 3 consecutive divergent highs right here. And finally, that big one, just like similar to the stock market, where we've been building, and sometimes from experience, I know people kind of give up. You get these comments, oh, these divergences don't work, and look, unfortunately, there are no guarantees. If there were, you just keep piling up, double down until you have your last penny fully invested, whether you're going long or short. But it's not that easy, because sometimes, and I would say that sometimes, and this is from experience, less than 90%, or I'm sorry, less than 10% of the time, divergences don't play out, they get burned through. So whether it's 85, 90% of the time, they do play out somewhere in there. It's enough, again, to put the odds in your favor. And although it's not written down here, you don't have DL, that was a divergent low. So, without fail here, you can see all the trends. There was a divergent high there coming into it. Correction, rally, correction, rally, correction, rally. And that's where we're at right now. And so, as I say that divergences are not a buy or sell signal, what is a break of resistance, or a bullish engulfing candle, or any type of bullish reversal candlestick pattern. And so these are the two levels I'm watching. Target right now, let's just say a preferred target, and maybe it just the only target that I really see right now, or at least one that I would call a high probability target, is that level right there. It's just over the about 98.70 on the dollar. These are dollar futures, DX, and that is because you had a pretty major support level there, a lot of reactions. When it broke, you had that impulsive sell-off. So that's what I'm looking at. Yeah, and look, again, these divergences may continue to expand. I mean, it would look like this. We go down, dollar takes another leg down, and it's possible they get taken out. And if they get taken out, that starts to change things. But as of now, they're intact. So that's what I'm looking at. And again, we'll look at how it might impact the stock market as well as those dollar-sensitive commodities. The other one was the euro. Actually, it was on this. I'll just use these charts are fresh. They're from this morning. So you can see there the euro, the two trend lines that need to be taken out. This trend line here, we'll zoom in a little tighter for you. If you expand the charts on the home page, on the posts up top, if you have a scroll wheel on your mouse, which if you're not using a mouse with a scroll wheel, I would highly recommend one, not just for these charts, but surfing the web in general, rolling up and down pages and all that good stuff. But you can scroll in and out using that, or you can use this little thing here. We need to take out this trend line and then the secondary trend line right here, and that should trigger a drop in the euro, which is effectively a inverse of the dollar because it is the top weighted component. So that's it. And I did add, well, there you can see the charts of USO, the unmistakable correlation. I flipped the dollar upside down because it's a lot easier to view a positive correlation. So when we take two assets that are inversely correlated, like the dollar and crude oil, and you flip the dollar upside down, it turns it into a positive correlation and lets you see. And again, the most important thing on this is to know that they don't move in tandem in percentage terms. A 5% move in the dollar is a big move. A 5% move in crude oil is a daily typical run-of-the-day move. 3-5%. Crude oil moves a lot more in percentage terms. So don't pay attention to the differential of these lines. In fact, they're not overlapping. What you want to look at are the trends. When one is falling, what's the other one doing? Is it falling as well? When they're both rising, this was a period where they disconnected. So I'm going to say that right here to here. But other than that, the relationship returned, and you can see both were falling here. Both were rising here, both were falling here, both have been rising since, with a little, again, a little blip there. So that's why I'm really putting a close look right now on the dollar. And I did the same thing for silver. So these are, trade ideas, trade as you want, use a silver ETF. I mean, this is strong. And again, I think big part of it is the demand with the stock market going up. And that assumes, since the stock market's been rallying, that people are assuming we're going to continue to see the economy strengthen, that everything from COVID is behind us. That, again, that's not my assumption. That is the market's assumption, why the stock market's been rallying. And therefore, it only makes sense because silver is more of an industrial metal than gold. Gold is an industrial metal as well as a precious metal. Gold has many uses, as does silver. Silver is also used in jewelry, but silver has a pretty good industrial application. So therefore, when the economy or the stock market's rallying, it only would make sense to see silver rallying. But at the end of the day, most of that rally, you can see it clearly here, has been driven by the dollar. This relationship is extremely strong, and here's that last leg up where they both been rallying. So those are two trade ideas. Now you can short the dollar, you can go long the euro. That certainly can do that, and that's why I put these charts out there. If you're a futures or currency trader, forex trader, I know the majority of you aren't. I know that from just talking to people on the site. And so here's silver, and you could trade the ETF, you could trade the futures. Crude, you can trade CL. Let me give you an update. I did post some updated charts on the homepage. Let me get to that. I always encourage you to follow up on the comments section. I've actually been behind lately. I'm trying to catch up to all the comments. Been a lot going on last couple weeks here, but that was, I gave you this one here. This is crude oil. I can't zoom these down. I have to add that, just get a programmer to add the zoom function. But if you can make it out, this is WTIC, which are the crude futures. Just stockcharts.com uses WTIC. It's the same as CL. I'll refer to CL when I'm using another charting program /CL. But there's a big old gap, very technically significant gap. I mentioned that as well with USO also yesterday in the video coming up too. So you have crude oil at resistance. And I'll just say it out loud. You're going to get, I believe, a much bigger bang for your buck percentage terms on a crude or silver short than you will on going long or short that U.S. dollar. Now, again, Forex traders, and I don't need to tell you this, if you trade futures, Forex, those are leverage instruments. So you're going to, you don't need a big move in a currency to make a lot of money. But if you're trading the ETNs like UUP, you're not going to make much because UUP is not leveraged. So you're not going to really, you can certainly buy more, leverage up on it. And then I did add this chart as well, crude futures. Here, let me get to it for you. That I added that in the comments section, and this is what it looks like. So what I'm looking at on crude futures is a potential setup. There's a trend line right here, uptrend line. You had a little wedge here, rising wedge, and it was certainly good for a pullback. It doesn't look like much, but crude's been moving so much. I'm going to guesstimate that because I can't put my measuring tool right here. It'll move that line. I'm going to do it here. That was better than a, what is that, a 10% drop right there. So, 10% on crude futures. And now what we have is a pretty well-defined supports and sends. So again, just to kind of rehash, we had these little wedges working our way up here in an uptrend with 10+% corrections. Another little wedge right there. Divergent high on the first wedge before it broke down. We extended the divergence here, right there. Had a second, another 10% drop from the top of that range. So these are the levels I'm looking at. So 34.76 or 75, we'll call it, is really the top. We had several reactions. We just broke out above it. So what I'm looking for is a drop back below there will mean this is a false breakout, and at the same time we'll take out the uptrend line. So whereas a break of one support level is pretty good for a sell signal, a break of two that come in together is even better because there's different sets of eyes. Some people are watching 34.76, some traders have stops set below that, others might be watching this uptrend line. And so if you can see them both go with conviction, I don't even have to measure it because I already did here. That was a 10% drop, so that one would have been as well. So a break of there would also be another 10% drop down to that $31 support. So this is my outlook for crude. To be clear, we have absolutely zero sell signals at this time. Crude is in an uptrend, just as the dollar is in a downtrend and the euro is in an uptrend. But if we start to see, and that's what I'm watching, that's why I do these videos, I want to see the dollar break out, I want to see the euro break down and crude break down, not just one. Because if you have just crude, let's say, break this, but the dollar doesn't break down or break out, and the euro doesn't break down, well, guess what? That may be a whipsaw. But if all of those break down, the probability you're going to get that 10% drop increase substantially. And then if 31 is taken out, 27.75. So what is that from where crude is right now? You're talking a pullback of about 22%. Max target at this point in time down here, 24.36. Let's just take it one day at a time, one level at a time. But I wanted to share these ideas because these I think have not just a lot of meat on the bone, profit potential, but they tend to move fast. That's a good thing. Crude's been kind of grinding up. It's been a powerful uptrend. That kind of reinflation trade with everybody coming back online, cars starting to drive around again, planes starting to gradually get up in the air. So we've seen crude snap back, but again, I showed you it was on long term, it's at a very significant resistance level, and you have this big divergence that's been building. So there is a potential for a minimum 10% drop. That second target would be about a 22% drop, and if we get all the way down here to that 24.36 level, that'd be about a 32% drop in crude. Okay, on to the markets. Last night's update, I said we'd get a sell signal. Next sell signal on NQ would be a break of this minor trend line right here. We did get that. I added, since the chart yesterday, I've added a level here about a minor support level, 95.56 right there, and that was this previous reaction high and where we hit right after the breakdown this morning. Sometimes you break support and that's it. You never look back. Sometimes you break support and you do what we did today, which is a back test of the support level. So there's the breakdown in crude. I'm sorry, not crude. NQ, the NASDAQ 100 futures. Kicked back tested the trend line to put in a divergent high. You can see the negative divergence, and so far we've fallen. We took out 95.56. We're headed down here, and this is really, minimum. I think we'll come back here, but each of these are support levels. So where we could get a reaction, where reactions are likely. So this one's coming up. That is 94.95. You got to round it up there. These things don't snap to the nearest quarter point. Remember, the NQ futures trade in quarter point increments. And you could call it 94, 94.75 would be the closest around. But when you don't want to cover. You want to cover a little bit above there if you're an active trader, and that's all you're looking for. Now, when I go back to the charts of QQQ. Remember, just like some of the things that I showed you a minute ago where the divergences were building and building and building, that's what's been going on in QQQ. We had a divergent high right here, pointed out at the time. And it's not as if it didn't play out for a pullback or correction. It did, but it was small. And we pushed up. We continued to expand those divergences. Same divergences. Again, I'm going off this starting point right here. They expanded, get a little bigger correction, bigger divergences, bigger correction. And now what we've done is, this most recent high would look like this. We've expanded the divergences once again. So they continue to build. They haven't been taken out. Doesn't guarantee that they'll play out. It just indicates that if they do, which odds favor, we need to get a sell signal. And that's going to be a break of this blue uptrend line and that 227.80 level, pretty big level, I think. That was that previous high. We broke out, went through there a few times. So this is still the same sell signal pending on QQQ. Until then, it's just had a very slow grind, but a steady, persistent bid. All pullbacks are getting bought up. But again, these divergences as of now haven't been taken out. And in fact, not even close. They're still very much intact. And now let me show you something else. Speaking of the dollar, I'm going to take away all the lines. Let's turn on. Here's the US dollar. You can use UUP. And you can see it's the market's been trading inversely to the dollar. So what I'll do is I'll flip it upside down, use UDN, the inverse dollar, and you can see an almost perfect correlation here, again, which is an inverse correlation to the dollar. Really, since the plunge started, got going in March. Before that, there was an inverse correlation, but you can see here. UDM was falling, meaning the dollar was going up, the stock market was falling. But look how perfect this correlation is. They're moving in near unison. There was a little disconnect right here in this period, but other than that, both up, both down right here, a little correction. At this point right here, you can see there was a little bit of a disconnect here, but lately we've been moving up once again in almost perfect unison, even these little zigs and zags along the way. So this would also indicate that if we get a breakout in the dollar, we may see a trend change here in the market as well. But again, the correlation is a little bit stronger with commodities, and it's an on-off thing. So you can't bet the farm, but these are just many of the things that go in. You just kind of keep an eye on all of it, and you get the if we happen to get the breakout in the dollar, is it impulsive? Is it convincing? And if so, do we get some concurrent sell signals that come around that same time on the markets? That's QQQ. We can look at SPY. Same thing. You can see it there. Very, very clear correlation, with both of them moving up lately. They were moving, down here, moving, positively correlated when I flip over the dollar upside down to UDN. And I'm not sure if I already mentioned this, so I just want to cover it again one more time, that gold, I'm focused more on silver than gold when we get that trend change or, some confirmation of sell signal on the dollar, because gold now, going back to almost the beginning of April, has just been locked in a sloppy sideways trading range. So this chart is not very clear to me. I look at this and I just see something that's chopping around, grinding around, could break either way. I think if the dollar breaks out, that should give a tailwind to gold. It should help if the dollar breaks out. I'm sorry, no, that would be net bearish for the dollar. I'm sorry, dollar up, typically gold down. But again, I don't have a strong read on this chart, so that's why I'm looking at silver, which had that nice rally over the last few weeks with the dollar falling, and I can see, to me, this chart is just a much more it just speaks to me more. I can see the clean divergence. We had a little divergent high here, pointed out at the time, had a correction there, followed up, put in a divergent low right there, followed by a rally, and that divergent high that started here has actually grown. You can see from that point we have now much larger divergence, and we also have a sell signal there. We have a break of this trend line right there. Dollar might not have broken out yet, but silver's probably reading the writing on the wall, and there it is. So you could take a starter short position, I believe, right now in silver. Where's it going? Well, you can see minimum target right here. These are all targets. These are levels where I think we can go, and ultimately, let's just look at this one for now. That would still be a drop of about 7%. And if you trade silver futures, almost 8%, that put a few pennies in your pocket right there. SLV, I'd have to mark the chart up. I know I'm probably going to get questions. I know a lot of people trade those, and I should have done that before, but I didn't. Let's take the comparison off on UDN. Let's see if I have any levels marked up here on SLV. Yeah, we have a trend line right here. Let's extend that trend line. There's an uptrend line, which is an obvious target. There's our divergent high right here. PPO is still bullish above the zero line, so it's in bullish territory right now. But we have, for the first time in a while, some pretty big negative divergences on SLV. So what I would look at is, at minimum, well, you can see there's a level right there, pretty important level, 1632. That'd be a first target. A second target is right here, about 1576. This first line. I'll brighten that up a little bit for you. And then ultimately, if we hit that trend line and take it out, we'd probably get a reaction there. So you have a confluence of support. So I think silver looks something like this, assuming the dollar does break out soon. Move down here, bounce off that level, maybe a tradable bounce off either or the trend line, maybe overshoot the trend line by a bit, hit that 1576 level, bounce. And then depending on how things look, in other words, if it looks like we're going to have a little more upside on the dollar, we might get a break of this trend line that might send us down even lower on silver. But for right now, let's just say that. Let's just say that I'm targeting this level here, these intersecting levels, and that also correlates what I just showed you on SI, silver futures, about a 7% drop. And of course, the miners should, they're going to the miners tend to follow the metal. This is SIL. And SIL also has, some small, but there is a divergence here on the daily time frame, a little small divergent high right there, and also so far a potential bearish engulfing candle. We'll see how today finishes, of course, but that's worth noting. It's right about the same level we put in this little doji here recently. So pullback target right there. I think on the daily chart here, at least that 3382, that was a breakout over these previous two highs, and that's again Silver Miners ETF. This trend line extended. You can see we broke it and just back tested there. And for those that don't trade futures, I went over USO before. I'm sorry, CL, but here's USO. Here's levels to watch. USO, just like crude futures I showed you on that other chart with WTIC, big old gap back here, right there. And that's the resistance level. We already checked it once, put in a little doji, pulled back. We're still below it, so that's the story of crude. Wedge between support, which is this uptrend line, and resistance, which is the bottom of that gap. If the gap gets entered, then you look for a backfill the gap, top of the gap. Support is just a little bit below. I much prefer to use the charts of CL to kind of zero in on the targets, because that is, these ETNs can do a pretty good job of tracking crude prices, but the futures are what they're trying to use, and sometimes you get a little sometimes the charts don't mirror each other perfectly. So even if you don't trade futures, I recommend to keep an eye on the futures. You can use investing.com for free futures charts, real time. TD Ameritrade, a lot of platforms have futures now. They'll give you even if you don't have a futures account with them. So, all right, guys, let's wrap it up here. Let me get the video out to you, and we'll go from there. This has been Randy Finney with Right Side of the Chart. Have a great day.